For decades, the US dollar has been more than just a currency. It's really been a symbol of power, a tool of leverage, and the undisputed king of the entire global financial order. But, the world is changing. The foundations of that order are starting to wobble, and the king's crown, well, it's looking a little less secure. And that's the big question, isn't it? It's on the minds of economists and world leaders everywhere. We keep hearing these whispers of de-dollarization and new challengers appearing on the horizon. But to really understand if the king can be dethroned, we first need to appreciate the sheer scale of his kingdom.
So let's just start with the hard numbers. Think about this. Right now, the US dollar is on one side of a staggering 88% of all currency trades on the planet.
And when it comes to global trade, 54% of all goods and services are invoiced in US dollars. And get this, that's even when America isn't even part of the deal. And finally, central banks all around the world hold over half of their foreign exchange reserves in dollars. So if you think of the global financial system as a bloodstream, the dollar is basically the oxygen. So how on earth did one currency get this powerful? This kind of dominance, it doesn't just happen by accident. It was forged over decades of economic might and some very shrewd political maneuvering. And if we look back in history, this isn't the first time an empire's currency has ruled the world. This situation isn't unprecedented. Before the dollar, it was the British pound sterling that ruled the financial world. At its peak, it invoiced 60% of trade. It was backed by the world's largest economy and was the dominant trading power of its time. The parallels are pretty hard to ignore, and they serve as a powerful reminder. Empires rise, and they fall, and so do their currencies. The dollar's rise to the top can really be traced through three pivotal moments. In 1944, the Bretton Woods Agreement essentially made the dollar the center of the financial universe. Then, when that system ended in 1971, the dollar didn't just fade away. Nope, it found a new anchor: oil. Through the 1974 Petrodollar Agreement, the U.S. made a deal with Saudi Arabia to price oil exclusively in dollars, which basically hardwired the currency into the lifeblood of the global economy.
So what does America actually get from having the world's reserve currency? Well, it gains a set of advantages so profound, so lopsided, that a former French finance minister gave it a fittingly dramatic name. He called it an exorbitant privilege, and it's a term that just perfectly captures the unique economic and political power the U.S. wields simply because it prints the world's money.
Let's break that down. Global demand for dollars means there's constant demand for U.S. government bonds, which keeps borrowing costs incredibly cheap for Washington. America can also finance huge deficits by simply creating more dollars, without having to fear the kind of currency crisis that other nations would face. But the most potent advantage of all is control. When your currency underpins the whole system, you control who can access it.
And that control is being flexed more and more. The use of financial sanctions has turned the dollar from a neutral medium of exchange into a powerful tool of foreign policy. As South African President Cyril Ramaphosa put it, payment systems are now instruments of geopolitical contestation. And the numbers really back this up. As of 2024, the U.S. has active sanctions against more than 15,000 individuals and entities. That's more than the UK, Switzerland, and the EU combined. It's this weaponization of finance that's accelerating the search for an alternative and prompting other nations to ask, why should our economies depend on the dollar? This growing frustration has sparked a global search for an alternative. But if not the dollar, then what? Let's take a look at the potential contenders for the throne. First, you've probably heard a lot of talk about a shared currency for the BRICS nations. The thing is, the practical hurdles are immense. A common currency requires a unified monetary policy and deep political trust. Trying to align the economic interests of Chinese manufacturers, Russian energy exporters, and Indian farmers presents a nearly insurmountable challenge. So, what about an existing currency? The most obvious candidate is the Chinese Yuan. As an economic powerhouse, China has made some impressive gains. The yuan has tripled its share of trade finance in just 4 years. But as this chart shows, the gap between the dragon and the eagle remains a vast chasm. We're talking 6.3% versus the dollar's 82%. And there are two fundamental reasons for that gap. First, China's capital controls. A global reserve currency needs to be freely exchanged and accessible, but Beijing restricts the flow of its money across borders. Second, and maybe more importantly, is trust. Global investors have faith in the U.S. Federal Reserve and its independent legal system, chaotic as it can sometimes seem. They just don't have that same confidence in China's state-controlled institutions. So if a BRICS currency is a distant dream and the yuan isn't ready for the throne, where does that leave us? Well, it means we're not heading for a dramatic dethroning. The reality is something slower, messier, and far more complex. So the future isn't a simple replacement. Instead, what we're seeing is the slow chipping away of the dollar's dominance. This points toward a more multipolar currency landscape, one where the dollar is still first among equals, but other currencies play larger roles in their own regions. The center is holding, for now, but the edges are definitely beginning to fray. And this isn't just theory. Countries are actively building the infrastructure for a world less dependent on the dollar. China has built its own global payment system. Nations are setting up currency swap lines to trade directly. We're seeing major deals, like energy sales to China, being settled in yuan. For a business in Brazil selling to a client in China, this means they can now conduct the entire transaction in yuan, bypassing the US financial system altogether. Each is a small step, but together, they're forging a parallel path. The dollar's deep institutional advantages mean that when global markets get shaky, investors still run to the safety of the greenback. Its reign is not ending tomorrow. But the slow construction of a parallel system raises the ultimate question. In this new age of fragmentation, for how long will the world's reflex be to run to the king?